Yeah, that body's a blessing, girl. I ain't trying to pressure her. She messed with the temperature.
Hello there and good evening. This is Nano from the Crypto Doctor, and just thought to hit you up with a bit of technical analysis for this evening. So this morning I posted up this chart, and you might be wondering, well, what's happening? The market's going down. I don't know, and I don't consider anything on this channel to be financial advice. Make sure you do your due diligence. So let's get down to the charts. So first of all, this is Bitcoin versus the US Tether on Bittrex, the 4-hour charts. And now I have a basic Eliot Wave formation put up here. Now this Eliot Wave formation tends to like follow the rules or protocol set up for Eliot waves. Now a lot of things look like Eliot waves, a lot of things could be Eliot waves, but generally there is a rule to every technical analysis idea made or set up. So like now in this technical analysis, the first thing to note is the first wave. Now the first wave generally is going to be what you see from here, from our swing low, which we will find using our Fibonacci. Swing low means a point which has the lowest point with a higher point behind it and a higher point up in front of it. And then we need a swing high, which is the highest point of the charts. Now, next, from the first move to the first retracement is the 1, 2, 3, 1, 2 waves. Now we have the third wave. Now, generally, the third wave has to be the longest wave in the whole sequence. Now, it is where we have all the price action and movement. Now, after that, we finally have the fifth wave forming. Now, the fifth wave can never be the shortest wave and can never be the longest wave. So it could be said to be the one in the middle. Now, generally, after the fifth wave, we should see a correction. Now, according to how we know markets move generally, we expect markets to correct to the 61.8 Fibonacci level. And this is what we see here. Typical correction to the 61.8, and which is definitely a bit convenient because we can pull up our upward trend, which has been tested like 3 times now, 1, 2, and 3 times, to be the same level, which is good. Now, the place where a lot of people have issues with Fibonacci is not finding the waves, but finding the correction. Now, some of the rules of the correction states that we have the first impulse wave, which is A. Now, after the impulse wave of A, we should have a B. Now, generally, where does B go to is where the question is. Now, B generally will move to also the 61.8 Fibonacci retracement. Now, first of all, we had Fibonacci extension, using the extension to where it retraced to the 61.8. But now the bounce off the resistance to get the B level will happen to the 61.8 generally, or even above the 61.8. But according to the rule, it can't be more than the 78.6. Yeah, it can't be more than the 78.6 Fibonacci level. Now, I am not seeming bearish on the market, but all I'm saying is, okay, my idea is the markets should trend all the way to 5,086. Now that is where I see the markets possibly going, the new all-time highs that might be. Now might not be, I'm not trying to call the tops, but that's what I see from technical analysis. But when I sat down and I thought about it now, also you have to factor in that when you have the B wave, now the B wave is generally going to have less volume. Now you can see during the first impulse wave, we had a bit more volume, and now the B wave will generally have less volume than the previous wave. And according to the rules, you should also expect to see a spike in volume during the formation of the A wave. And here we see it, a lot of spike in volume. And then we gradually see a fallout of volume, though the volume seems to be increasing, which also means the sign of what? The third wave forming. Now, according to the rule, or according to the principle, the third wave generally should be the same distance or even more to the first wave. Now, this is the whole distance from right here all the way to here. Should be a similar thing we should expect to see here. So, if we expect to see this, that is going to be possible, because now, if we add up to sentiment happening in the markets, as the month comes to an end, we expect to see the hard forks. Now, after the Bitcoin Gold hard fork, we expect to see a sell-off generally as people move it back into alternative currencies, altcoins, and then we expect to see a pullback again into Bitcoin to expect the final big hard fork next month. Now, generally, this might be the level where we might have this correction, or we could even have this correction right now. Different factors could range, but I see this move to be healthy. But as of from here, the move became parabolic. Now, this could be market manipulation or whatever, but generally, the whole idea is we see a whole lot of people wanting to get in on hard forks, because last time there was a hard fork, we had a lot of money being given to people for free because everybody got Bitcoin Cash. Now, a lot of people now know what the markets mean, and a lot of people are getting in on this. So that might be the reason going up. But if we go through technical analysis, forgetting sentiment, this should be the way the markets should go from the point of view. Now we see the markets tightening up at this range here. It seemed to be the ceiling. Just like a few minutes ago, we broke through the 4,900 level, but we seem to have returned to the 4,800 level, and that seems to be the major level where the markets are kind of consistently holding for the middle, trying to break through the former all-time highs. Now, if these markets don't hold up above the 20-day or the 50-day exponential moving average, we could see a fallback. And as the rules say, when this level starts to drop, we could see some increase in volume trying to hold it back until halfway people understand that, okay, we're in the bear markets for a while and just have to let go and stuff. But now this might not be the same distance from B to C as described here, but I look at this as a compromise. Now the markets might not trend as low as, because if we are to calculate this distance, we should expect the markets to go as low as 3,000 or even 3,100, but that might not be the case. But this could be a compromise. If the markets move towards this uptrend line, we should have a lot of buying action at that level, pushing the markets back up. Now, as I said, this should not be considered as trading advice. It is just what I think I see on the charts and a possible explanation. Now, trading is all about probability. Now, the probability of it happening and probability of it not happening are kind of similar. Now, anything can happen in the markets. The markets will decide what to do, because it's not just one person controlling it. It's all these candlesticks describe like a lot of people just trading the markets, doing what is needed, and the markets will do what it needs to do to keep going where it needs to go. So you should also understand that technical analysis only works when you're not the only one looking at that kind of idea. Now, if I'm the only person seeing this idea, then there's a high chance it might not even be feasible or might not actually function as said. So the more people learn technical analysis, you expect to see more stability in the markets and more trends like this actually forming and moving. Now, coming back to the charts, we can see the MACD. We had this MACD cross, but the separation between the two moving averages is not much, which seems like the markets are kind of still tightly close together. Now we'll expect to see a breakup of this line or a slight correction before this space opens up, before we see some big movements as the volume increases. So generally, if the markets go high, I'll predict or expect to see it move up to the 5,058 or 56 and possibly drop or keep going higher as people expect to get more Bitcoin Gold. So thank you very much for watching, and for the quote of the day, I would say time in the market is way better than time in the markets. Have a nice night. Peace out.